Hello, everyone. Good evening. What's up, Sniper Dog? Welcome. I hope you guys are doing well. I hope that what we discussed about the markets has helped you guys avoid some of the turmoil, has maybe even led to some shots that have allowed us to make some money. We'll start the discussion. Obviously, you can ask any questions you want, directly post them here. But we'll start by talking about what we expect from the market tomorrow, right? Where do you think it's going to end up tomorrow? So this is one page that I think everyone should be watching all the time. They haven't done a brilliant coverage of the Iran war for some reason, but this is one of the best ways for us to kind of keep seeing what is happening and where it's happening. In the main events that I'm tracking, Abhi, one is that US tankers have been downed by Iran, though they haven't claimed responsibility yet. Then the new supreme leader came out and said that he wants all the bases of US removed from the Middle East, which means that he's not ready for the war to end anytime soon. We can expect attacks on other commercial infrastructure, I mean, banks and the likes, very soon. There was also an attack on the Bahrain oil deposits, which is a new, because when you attack oil deposits like the US attacked Iran's, then you're not just threatening future flow of oil, you're also threatening the safe haven asset that they have, right? In the sense that what do they bank on? If they can somehow get the oil out of Hormuz Strait, what do they send it out from? So that was also attacked. Now, what I'm also looking at is crude oil has shown us. So this is not Brent. This is WTI. So it'll show a little lower value that has gone past 100, and this is days high essentially. So yeah, the oil market is clearly telling us that there is more pain ahead. Dow futures down 1.5%, again days low, and Gift Nifty again at days low at 23,526, which is equivalent to Nifty. If you look at the premiums in a high volatility environment, this is Nifty at 23,450 or something like that at best. So if you just look at where Nifty was, Gift Nifty at 330 was at 23,700, and I think Nifty closed at 640. So there's a 60-point gap there, and then there is the adjustment of the final hour as well. So we'd expect Nifty by this metric to be already around 23,450. That is that's a fall, right? That's a 1% fall even tomorrow. So that's the general expectation that we see for Nifty. Oh my God, I'm so sorry, guys. Here we go. Okay. Again, Gift Nifty down about 1%, Dow futures down 1.5%, and crude oil at 100. That's the basic news that we're dealing with right now. Now, where does this stop? Where do we expect, or at what point do we think that the market is going to turn? Very difficult to call right now, because it's not just that crude oil has not become difficult. There is a talk by a very well informed person on Bloomberg, right? So Bloomberg Live, you can check on YouTube, and he says that the US debt is increasing at 50 billion a week during this war, which is about 2 billion a day added just by the Iran war. And the Trump administration also came out with the exact figures, and I think they spent 2 billion a day on this war so far. So that means the US debt is also swelling, which puts pressure on the US Treasury market. So if I just look at the US 10-year bond yield, you'll see this move coming in over what the last 10 days or so. So this is where the move started, right? 3.96 to 4.2. That's a 10% move in bond yields in what, 2 weeks. That is a massive move. For bonds, that is massive. Now, I know a lot of you don't track the bond market, but let me explain bonds to you very simply, right? That's where most of the money is. First up, it's a bigger market than all the equity markets in the world combined. Now, whose money is there? The biggest investors, in the sense, people who are dealing with billions and trillions, right? Hundreds of billions, let's say. Those people are parking money there just to get this 4% yield. So when you say 4.25%, this is what they get annually. Now, if this yield is rising, that means people are saying that this bond is now risky. So what we want to do is reduce our exposure to the bond or get a greater rate of return. That's the idea behind the bonds here and the move in it. Now, should you invest in REITs? Is that what you're asking, Sniper Dog? Because I think there are two big REITs in India. We'll just take a quick. I don't think there's too many other people here, so we can take a quick detour. So the reason you'll see REITs rising right now is dividend yield. That's about it. That everyone can see that right now there's no other stock that's going to give us good returns. So what do? We go into REITs, at least we get 4% a year. It's kind of like investing in bonds, right? It's very similar to that. So there's Embassy, then there's Brookfield, I think, right? So you have a few of these. I have always tracked Embassy, and it's a good stock to buy at big falls. So if I get it at 300 or so, it's a good stock to go into, but not at 490, 500. I wouldn't go in at these prices. 4% return here, I can get it out of a savings bank account. It's a dividend yield of 5.5%. In this Inca savings bank gives 5.5% annually. Same deductions. So it doesn't make sense for me to park my money in equity markets to park it here. The only logical way to do that would be, well, not really, because here you'll also pay transaction tax and then you'll pay your broker and all that. So instead, I would go into a savings account. Doesn't make much sense to do that here. Right. My portfolio is what, 5% invested, not even 5% invested right now. My holdings are basically nothing, the same as they were last Sunday. We had some Delta Corp, some PI Industries, a little bit of Aarti Industries. I might be missing one or two here, a little bit of Varun Beverages, but very small quantities. I'm talking like, 80, 90,000, 1 lakh in one stock, very small by the size of portfolio, very small investments in that. The idea being that I want to stay out of equities even now. In fact, I've just started deciding to go into a few stocks. So there's a list of stocks that I shared with you guys. Pehle. Irida is something that I'll probably buy into over the next couple of days, most likely, because the power sector has to do well going forward, and Irida at 100 long term, you can't beat it. And I'm counting on a dividend deal as well. So then it might rise a little bit, but this is my delivery portfolio. In my futures positions, I am short massively. Like when I say massively, I'm short massively. And I have covered some positions. I built new ones and I covered some today as well. But I think I'm going to hold on to them for a little while. It's difficult because I see profits, but no, I don't think this is done. I might miss out on the last 5% that I have to give back to the market, but I feel like there's much more to be made here. For example, I'm short on Ashok Leland. I talked about why Ashok Leland should be everyone's short. I'm short on this, and I picked it right at the peak. I think 210 or something. I was lucky, but I picked it right at the top there. If you want to see my failure, there's also Nalco. I'm short on this stock, and I think I'm short from 370 or something, and I'm holding it. Even if it takes a year, I'm fine with it because metal stocks can't keep going up forever. Let it rise. I can take the hit. I'll just hold on to it. No, there's no intraday shorting for me. My shorting is always positional because my strength, as I said in the last one as well, is my strength is macro investing, right? Like I understand macroeconomics. I read up on things, I look at news, I analyze those, and then I can build a position shortest maybe for a month or so. Sometimes maybe it plays out in a week, but my idea is generally at least a couple of months, 3 months, and I'm ready to hold it for a year and a half if I have to. That way I feel like I'm not playing with my money. I'm not gambling anymore. I'm seeing, for example, right now, I'm seeing that Nalco is trading high. Okay, let's try to explain this. Why is Nalco currently rising while other stocks are falling, right? There are two main reasons. One is obviously the domestic demand and even international demand for metals will rise because metals from the Middle East cannot move out. The second is Nalco has captive power. So Nalco had captive power and captive raw materials. Its bauxite mine and everything is its own. So Nalco doesn't have to rely on anyone else. It can just produce. In a closed loop, it can produce, right? That's why Nalco is getting a premium right now. And I'm sure that as long as the war goes on, I'm not sure, but because it's kind of been baked in, but Nalco might get a premium till the war is going on. But once that ends, it has to start correcting because it's a little overblown now. It doesn't really make sense. Plus, one of the biggest pillars on which metal stocks are standing right now are domestic investors, and they are weakening. You can clearly see in their buy sell figures that it seems like they're running out of powder. Maybe they have a bigger strategy. They're starting. P changes very fast, my dog. Like if you look at Naukri's P in 2022, it was trading at a 3 ka P. Then it started trading at 2000 ka P. So P is a representation of nothing. One way to look at P is Schiller P, right? The Robert Schiller that I talked about in the last session as well. He came up with a P where you take the average earnings of the last 10 years and divide that by market cap. That gives you a good representation. How has the company really been growing? Because in one quarter, the किसी की भी बढ़ सकती है ना. Like Nalco has gotten large margins and everything else recently, so it's trading at a low P. That can change in 6 months. So that really doesn't change much. So yeah, losses and wins on both sides. Among other shorts that are high conviction, L&T Finance have been short on. Today, I also shorted Shriram Finance. The logic behind that very simple. They mostly lend to commercial vehicles, and they will. Commercial vehicles as a sector is going to face a lot of trouble with high crude oil prices, even limitations when it comes to how much oil they can use or petrol or diesel they can use might come in very soon if this situation isn't resolved. So that's why you'll see the Shriram Finance was falling today as well. And I went short today and I was kicking myself because I should have shorted it earlier. But the idea being that most of these small finance companies, NBFCs, even including Bajaj Finance, corrected about 15% from the top. I wish I'd held on to that short, but most of them are going to suffer. Everyone exposed to commercial vehicles, logistics, obviously OMCs, they are. I am short on it. I hope you are as well. Definitely not Bhakti. So I really do not understand why the total gas is rising. It should face pressures. They already came out with a declaration that they're looking for ways to manage to manage the situation with the shortfall of LPG. They've come out with that. They've said they're in trouble. Then why is the stock going circuit to circuit? I don't understand. Maybe there is a news coming in that I'm not aware of. Maybe they're planning something. If that comes out, I might think about it. But otherwise, it seems like Adani being Adani, as far as I've managed to understand. Sniper Dog, I shot them through multiple brokers on in futures. Oh yeah, in futures. I don't use options because my timeline is 6 to 12 months. So using options there, the theta decay will destroy me. So I have to use futures. That's the only way. And the way I do that is I short directly 3 months ka. So if for example, if I'm shorting today, I'll either short May, or if I have the option, I'll short June, so that I don't have to roll over again and again and pay them money for no reason. Plus, the further out you are from the strike date, meaning if you're shorting in March, then the price at which you sell the June's lot is generally higher than the price you sell the March lot. So even if the stock moves sideways, I save a little bit. Carry forward as far as I need to. Yeah. The cost is basically nothing because my movements are going to be 10-20%. That's what I'm targeting. At least a 10-15-20% move. Now, sometimes if my thesis runs wrong, I have to book a loss or book it at a lower profit. That can always happen. But yeah, I like to play it out for a good 6-12 months. Yeah, Anantraj right now, it's too risky. I mean, Anantraj, don't get me wrong, among data centers, it would be one of my best picks. The idea simply being that it has land bank, and land bank will be the most valuable. Data centers have become a low margin business because of competition. So if I'm going into data centers, I'm going to go through the likes of Anantraj. You mean Geofinance, right? Bhaktal, do you mean Geofinance? Could you just clarify that? Right. So look, at this price, Geofinance isn't bad. The last time it came close to 200, I thought about buying somewhere here, 230 about. So at this price, I don't think it's bad. It's high PE, but depends on the timeline. If I'm buying it, and of course, I can only give you my opinion on it. If I was to be thinking about investing in Geo, I'd invest in tranches and I'd think about like a 5 year, 7 year horizon. This should be a massive company by then. The kind of businesses they're going in and the kind of financial muscle they have, it should become a huge company by 5-7 years. And then buying it at 40% off the top, that's never a bad idea. It has to become a stable company down the line. I'm not a fan of mutual funds right now, Sniper Dog. I would never say stop your SIPs. Like that's, I would never stop my SIP. I also have a ULIP plan that's annual, but a couple, three in fact. But I'd never stop them. But I won't add to mutual funds now. The fact that you're here talking to me, trying to understand the market, tells me that you're participating in the market. So whatever SIP someone has, that they should continue. But I really personally would never start a new mutual fund, and the market is going through this turmoil. Now, 3 months down the line, Nifty's at 18,000 or 21,000 or 22,000. That's a good time to put a lump sum, because then that will compound much faster than when you put it in at, let's say, 25,000. So chemical sector long term looks one of the best sectors to be in. I think stocks like Ether Energy, Aarti Industries, these will be some of the best performers, I believe, in the next bull run, because they haven't performed for 5-6 years now. So I would invest in chemicals in a structured way, in the sense that I buy now another 10%, another 10%, another 10%, or 20, however you feel comfortable. But I would buy in tranches in the chemical sector. I'll keep it overweight. This, and at the bottom, I would give metals one more go for a 6 to 10 month horizon. Not right now. They're overvalued, like so Vedanta, Nalco, and everything are very overvalued. If the market crashes, as I really feel like this is the time that it should give us a deeper crash, I do not think we're done. I still stick by that. I was thinking about it very deeply today. I went into some research. I tried to think about how could this stop, because it feels like it's oversold. But I don't see any way that this changes, because I don't see oil now that we've already gone through a phase where about, if I'm not wrong, 20 million barrels, 20 million barrels, no, 5 million barrels per day's supply has been shut off. Now to restart that it's going to take 2 months, and then it takes a ship about 2 months to reach us. So that's a 4 month lag that has been created. Even if the war shuts down right now, oil prices are going to stay at 80. If oil prices stay at 80 for 4 months, India's GDP slows down by in the sense, the GDP growth slows down by about 0.5%, 50 bps. So that means we cannot get good valuations going ahead. That's just the kicker. Then AI is rearing its head again. So a lot of things are happening. So metals as well, but chemicals, yeah. Now about Lakshmi Organics, let's just quickly take a look. So this is the only problem I have here, right? I am not going into any stock that was listed post COVID, because that stock was listed in a bull run. I want to buy stocks that have survived bear markets. There might be exceptions. There might be some companies that are just so good. Like Ether Industries is a company that is so well managed. It has no debt. It's profitable. It has some of the best management. And you can see it's still rising in this market because it's a high quality stock. So this is something that I would go into. I wouldn't have problems going into. But I don't want to go into any company that was listed after the COVID liquidity rush, because I don't know if they can survive a bear market. But if something has survived the 2008 ka crash, I know that company is going nowhere. Because this crash might be bad, it might hit profits, but it won't make companies that have survived the GFC go bust. You understand what I mean? So I wouldn't buy Lakshmi Organic. Deepak Nitrite is always a good bet. It's a company, the job isn't going anywhere, right? We have to grow crops, right? So it's not going anywhere, though it's overvalued. I still think it's overvalued. Yeah, the P still shows that. And remember, don't take the average PE to be 30, because that is baking in this entire period. This period was an exception the last 5 years. Its average PE should be mid 20s. So if it trades at that, and then look at this, while its earnings are falling, that's when its P is at 40. So if the earnings rise back, then the P does come back to a good spot. So based on that, I would probably think about buying once it reaches a decent support. It's a support at about 1500 here. Let's see if I can see it on a 5 year scale. It'll be easier. No, I can't. So let's see. This is a support of sorts. It's breached through that. So the next support is 1050, 1100. I wouldn't buy at these prices. I'll either buy at 1000 about, or I'll wait for a golden crossover to come in to just tell me that, yeah, the market has changed its opinion on Deepak, right? So sugar sector, Bhakther, is one of the most cyclical sectors out there. So the ethanol blend and everything did kind of take us through it. Let's look at the flagship company. So if you look at the long, forget about right now, just look at the long-term chart. Till COVID struck, this stock went nowhere. It just had cycles, right? It went to 190, came back, 190, came back, 190, came back. So what we saw here was an exception. I wouldn't buy into it. Might rise for one reason or the other. Some cyclicals come in, but these are never going to be multi-baggers from 500 ka price. I'm sorry. I know I'm saying I won't, but that's how it is. I'm invested in Varun Beverages, Sniper Dog. Very small position. I think I only have like 200 shares or something, but I took a bite. I'm going to keep taking bites of Varun Beverages. Now, it might correct a lot, but for this stock, I'm not thinking about buying it, getting a 3x return and selling it. This is a stock I want to leave in my portfolio. The idea being that no matter what happens, Pepsi and Coke are not going anywhere. They've survived world wars. Forget about recessions. These companies are not going anywhere. They will find a way. And then if they already have a relationship with someone in India, they're going to most likely stick with them. If that thesis changes, then I come out of the company. But otherwise, it'll be one of the blue chips that I hold because I expect this one to grow. And very counterintuitively, this is something that I have a very sharp eye on. I really want to buy into this company because I believe this is a linchpin stock. Like it's not going anywhere again because it's jockey, right? Even if, in fact, even in metropolitan cities, right? Even some of the wealthiest people I know, they wear jockey, and jockey is like a premium brand to them for some reason. So this stock isn't going anywhere. This company isn't going anywhere. It has some of the highest ROC in the country. Its distribution network is unparalleled. Nobody can build something like that. It's like Asian Paints. Right? The Birlas can try to take them out, but you can't really do that. Once someone's established themselves so solidly, it takes one good strike back for Asian Paints to beat out the Birlas. Same thing applies here. Page Industries can't be taken off the map. So I won't buy at this point, of course, because it's breached. There was one support at 34 about, it's breached that. So I have to wait about at the 30,000 range. I'll start nibbling once it reaches proper 30,000. That's still about, oh, wow, it's already reached there. Perfect. So I'm going to start taking a bite of this as well. Deserves a reassessment, but I'm going to start taking a bite out of this and I'll average on the way down. This is a company that I've really been looking at. Um, Esconet is a great long-term bet still for me. Now, it's an SME, right? So there's always this risk that the company is just going to turn bust. So if I'm allocating to Esconet, it's a 1% allocation at most, knowing full well that I'm ready to lose that money. Like you can't go to a 160 crore market cap ka company and think that it'll be a safe investment. But if this does do well, then it will just be a thousand backer. So that's what I'm thinking. I'm investing 1%, but I stand to really make double my portfolio based on this, right? That's my idea on this. Its competitor is this NetWeb Tech, a great stock to go into. If you can find a good entry point, NetWeb Tech is a great stock still to go into. Sniper Dog Surya, the small finance back, I don't follow well enough to give you anything on it. I can just say that I'm not very confident investing in banks or NBFCs right now. I see a credit crisis finally coming in. Thank you. I see a credit crisis coming in. So, in that credit crisis, to go into small finance banks makes no sense. Could you expand, Techikant, what you mean by MLDs here? Just give me the definition or just the full form, please. So, Bhaktal, which sector will be multi-baggers going ahead? It's difficult to call that before the bear market peaks because we have to see how things play out. If we're talking next 1 month, there aren't too many sectors that will do too well. Coal, maybe Coal India, it's overvalued though. So that's the problem here, Bhaktal. Like we have to, oof. So we have to think about. Let's say I want to buy into stock A today, right? I think the stock is going to do brilliantly. It's trading at 100. I think the stock price should be 400, but I know that the stock can correct to 50. Why would I buy today if I know that the market is weak? So that's my idea behind not calling out multi-bagger sectors. But there are sectors that I can start accumulating small bites. The likes would be chemicals. That I think has a resurgence of sorts coming in. So the best, right? We're talking about SRFs of the world, right? We're talking about Ether Energies if you're going slightly smaller market cap. Beaten down stocks like RT Industries. So those stocks we can look at. We can look at power sector as well. They have corrected a little bit. So we have your AFCs and RECs of the world. You can also look at that. PSU banks are a no-no. I told you that I think I said I'm going to short them before the market crashed. So let's say SBI, I was short on. I remember saying this 2 weeks back. And it's given us a crash. I booked out of my position though. It's too big a bank for me to stay short on for too long, but I easily see it correcting back down to its previous high. So PSU banks are a big no-no. As I said 2 weeks back or something, again, they're hiding something in the sense that their asset quality is not declining like private banks are. That doesn't make sense. Right? Now, market-linked debentures. Let me just see what that even means. Let's try to. Okay. Okay. I don't think this is a bad investment. I think the way I'm understanding it is it'll pay you off at the end of the period, right? Very basically, if I understand it. If it pays you off at the end of the investment, who was this? Techikant. That's how it's working, right? It pays you off at the end of the 5 year period. Just let me know if I've understood it correctly. If that's the case, fair enough, but you lose out on gains in equity. Because the idea is this correction in equities isn't going to last 5 years, right? You're going to see a bottom fairly soon, maybe 2 months down, maybe 3 months down, maybe 6 months down. And then the market is going to double in the next 2 years, where stocks go 5x, 10x if you pick the right stocks. So to put your money in debentures now, if you have hundreds of crores to invest, and the only thing, and you have a business, you have a very high paying job or something, and all you're doing with the market is protecting yourself against inflation, then sure. But if you're looking for returns, then it doesn't make sense to me. To go into any fixed return investment doesn't make sense unless maybe you're 55, 60, then it does make sense. You don't look 55, 60. So I personally won't go into it. But if you think that that fixed return is what works for you, then it works for you. Loris Labs. So Divi's is usually my pick in it, but they follow the same trajectory, very similar stocks. Let's say Loris, right? Let's just evaluate this. Um, at these prices, buying definitely not. I would book profits. The market doesn't seem to be bottoming out. It could give us a short term bottom. I don't think that's happening either, because it's now Hydra has so many heads, right? You have the AI, you have the debt, you have the cryptocurrencies. There are major issues going on in the cryptocurrency market as well. Then you have the private credit, and then on top of that, the one that's in the news, which is the Iran war. So you combine all this together, and equities, any stock trading at all-time highs is especially a large cap, doesn't add up to me. It has to eventually see a correction. So I wouldn't definitely not buy at these prices. K-Solves, it's a company I've talked about. Now, I really don't know. It's showing no signs of life. I don't think so. I don't think at these prices. It's too risky. Too small a company. I know I've talked about this. I take full responsibility for it, but I wouldn't buy it it's too risky right now. This is a time to conserve money. I wouldn't. Not at these prices, Raghav. So price less than book value is universal Supreet for PSU banks. That's just how they've been functioning for decades. Of late भी ठीक है कुछ there are some banks that might have gone above book value, but I think still most are trading at best 1 to 1.5 times book value. So price below book value doesn't mean anything for PSU banks. The problem is that they give out bad loans, and then they suffer because of it, and then they make investors suffer because of this. So would I go into Karnataka Bank? Would I go into any PSU bank? Nope. Or any small bank either? No, I would definitely not. FCL. Let's see what we mean by FCL. You'll have to give me the full name here, unless it's Phenotex Chemicals. I mean, it looks fine as a business. It looks fine, but I'm doing a very cursory analysis here. For me to give you an opinion right now would be very irresponsible. Can't really develop an opinion. All I can say is I don't think it's going to be like a multi-bagger. It stayed too long, and unless it's doing something very new. Is it doing something very new? If the market goes down, no matter how much your capital. So what you're saying is, if the market goes up 1%, you get 5.7% increase, and if the market goes down, you will not be at a loss. Is that what you're trying to tell me, Techikant? You're telling me that market goes down, you don't. If that is what anyone is telling you, just contact the RBI, because that's a scam, and I can give that to you on a stamp paper. No such instrument exists in the world. Forget India. There is no instrument on earth that protects you against the downside and gives you leveraged upside returns, that is a guaranteed scam. I would not give them a paisa. I would report them straight. Now, if you are someone who is doing this to, I hope you're not someone who's doing this to create it, because then I'll be reporting. Because there are people listening here, right? And if you're planning to invest in it, stay 100 steps away. These things do not exist. Guys, please ignore messages from TechieConf till he replies and clarifies this. Okay, let's see what's next. UPL, unless it's risen again, it was at a very good price. Thank you for bringing it back to my radar. I'd been thinking about some stocks to analyze. Yeah, it did give a comeback. It's a good stock to be in. There's no doubt about it, right? Because India, again, as an agri economy, has to grow because our government has to take the tier 3 cities and village people with us. That's real India. We haven't done much for them in the last 10, 12 years, barring the last 2 years. Say. So UPL is a great stock to be in, no doubt about it, but it can give you a better price. Maybe at a 500 about its investment is price pe to nahi, especially because of what's happening in the Middle East. Fertilizer stocks will be hit the hardest, one of the hardest, right? Because a lot of the urea comes directly from there. And so I wouldn't really go into it. Current market pass time in second wave after breakout third wave. What's the level to exit? No, this is not. If you are talking about what I think you're talking about, this is. I have analyzed it. It has 5 waves in total, I think. However many, it's the final wave. If to look at the right periods, I think the period we're counting from is 2000, and we're in the 5th wave. So we're supposed to see an end of that cycle. Bhaktil, no? If I'm understanding it right, we're not in the second wave. We're in the 5th. If it's 5 waves, yeah. No TechieConf. If look, I'm sorry guys, I'm just dealing with TechieConf once. If they're saying that they're protecting you against downside, meaning you have zero downside, but on the upside they give you 6 times returns, it's a scam. Full stop. There is no if, there is no but, there is no condition, there is no they might be doing something special. Nothing like this exists. It's mathematically impossible. It's mathematically impossible to do at scale. If someone wants to give you free money, they better be your family. Now, if your family is doing this for you, great. But if it's a stranger, he's trying to scam you. So not a single paisa. And that applies to everyone. Whatever this MLD thing is, I am telling you that in my humble opinion, it's a scam. Never think about it. Don't give it a second. Don't Google it. Don't nothing. Forget about it. It's a scam. All right, IFCI. Now, if you've explained it wrong, then that's very different. Because the way I understood debentures was very different. They were usually, the point of debentures was to bring out insolvent companies. That was the point of debentures. They were like an insurance of sorts, right? That you could give and get back some liquidity. Anyway, this thing does not make sense to me. Explain it better. Maybe that's the issue. But otherwise, stay away. IFCI. It's a financing company. I don't know why I would go into a financing company when we know there is a financial shock ahead of us. When the economy slows, rates cannot fall anymore, right? There's an inflation shock coming. Clearly, oil at 80, 100, 150, whatever it is at, anything above 70, we have an inflation shock across the globe. Interest rates are already high. They can't fall anymore. No central bank governor can do that, even if Donald Trump himself sits as the governor. So rates are not going down anytime soon, which means credit cycle will not increase anymore. It will stay slow. At the same time, repayment is going to stop because people are not making money. It's not just individuals, right? Of course, we will suffer because we have to pay more for everything, but companies will suffer more because their margins are going to contract. And that means they can't pay off all the loans, especially high debt companies. And most of the times you're going to find government PSU banks or government linked entities lending out to high risk companies. So I would stay away from financial. I know there's many people saying buy into banks and whatnot. I will stay away from them. I've been saying that for 6 months now. That you're right about, Ekikant. What matters is earnings. If a company is growing earnings fast enough, the returns will come. Uh, so look, I don't know if it's going to be free fall, Preeti. I don't. So Preet, I don't think I would have said that, but yeah, I think the market has plenty of downside ahead. 22,000 is my first target, at which point I would probably revise. Now, it could give you some jumps in the middle. Sometimes it has to flush out shorts, like it did on Monday, for Tuesday, for example. But was it Tuesday? Was it Wednesday? Anyway, you'll have short coverings in the middle that trouble you, that will make shorts think twice, that put doubt in your mind. But I do not think this market has room to run up. There's no justification for the market to run up. Precision wires. And you are Sniper Dog, the first guest today. Yeah, I would. Like, I would not think twice. Yeah, I'm not going to think twice. It might rise up, sure. But when the market is showing you clear signs of going into a bear market, and I'm in a small cap company that's at all time highs, having given 35x returns in 5 years, that isn't even a thought. It's not even a thought. Then Techicons, you need to explain it better because Edelweiss won't run a scam. That's for sure. This, let me do this. I'll read up on it. I'll keep this in the back of my mind. I'll read up on this and join me Sunday. We'll talk about it then because I don't think I understand it well enough. But if you ever come across this thing, now no zero downside and leverage return upside, that is not possible. Then there's something you misunderstood there, or whoever's explained it to you has misexplained it, tried to missell it maybe. But those, no such instrument exists. If you get a leveraged payout, you have to pay a leveraged fall as well. That's basic math. So Preeti, market has more downside. Free fall? No, I don't think so. The market's never. It could, but even if you look at the 2008 crisis, right, the market didn't give you a free fall. वो ज़्यादा time नहीं चलता. What I'm saying is, acha, now I know what you mean by this. So yeah, this can happen that you get a stock 3% down today, 3% down tomorrow, 3% down tomorrow, 3% down tomorrow, and it continues that 3, 4, 5, 10% down. Now 10% down could be 5 days, then it'll give you a 10% rally because the shorts have to be flushed out. Then it'll start the 5%, 10% down again. So if that's what you mean, it's still very much possible. In fact, it's become more likely. But it will never be for the entire Nifty. It can never be a free fall. Because even if you look at the 2008 crisis, no, this jump from March to May, this was a 15% jump. That means stocks rose 20, 25% in the middle, and many shorts would have gone bankrupt in bear markets. So bear markets aren't just risky for long investors, they're also risky for short investors. Path, I usually keep a massive pool of stocks that I'm following. And of those stocks, I use a mix of macro indicators or policy or triggers, basically, triggers of growth. And then I combine that with a technical signal of sorts. Now, technically, it doesn't mean that there has to be like a golden crossover or something like that. It just has to give me a good buffer, right? A safety buffer. It should at least be 10-20% off the top. I'm not going to buy a stock at all time highs. I've never bought a stock at all time highs in the last 5 years at least. Even if I think it's a great company, I'll wait. If it doesn't fall, it's a missed opportunity. But it has to give me a safety buffer, is one. Then if it's technically well placed, as in if it's at a 200 DMA, 50 DMA, or somewhere between that, then I'll time it right. I'll try to time it as well as possible. Again, if it doesn't come there, missed opportunity. Now, sometimes it's 20 stocks, sometimes it's only 10, sometimes it might go to 30. It's never going to be 100 stocks though. And more of my time goes into the futures part of things because these deliveries, when the bull market starts, I'm going to take deliveries. I'm probably going to be 50% delivery investor and 50% in futures. But right now, it's basically 3 stocks with a very small exposure. Hutko, Sniper Doc is going to ask me about every stock in the market today. It look, to me, it seems like it has a support around this 165, 160 range. It doesn't look like a huge support, but it does have something there. But would I buy into a public sector company right now? I don't think so. I don't think the government will have enough money to finance anything. So, kya karenge? Prakash, I'll keep that in mind. I haven't made a video this week. There's been a lot going on. So I felt like maybe live was better this week. But I'll keep that in mind. I'll make a video on that. I'm not saying that techie. Read up better. If it's an Edelweiss fund, no, then they won't scam you. That's not how it works. So I think you might have misunderstood it somewhere. Yeah, I'll add that. I'll add that. I'll give you very basically, right? If let's say I want to analyze a stock, yeah. Let's say we'll go to peers for Hudco and pick up the second stock, whatever it is. Let's say IRFC. If I want to look at finances very basically, right? First thing is the balance sheet. Let's check. It's a finance company. The reading the balance sheet is very different. Sorry, let's pick a different one. Let's pick a beautiful company. I can't practically explain how to read a balance sheet for a bank or a financing company in a live call here. That is a 2 week exercise that I don't think I have mastered yet. So finance companies ka balance sheet analysis is a very complicated thing. Right. So the first thing I'm going to do for a stock is check the balance sheet before profits, before quarters, whatnot. Check the profit, check the balance sheet. Make sure it's not over leveraged. So I see good reserves, right? 1400 crores. Borrowings are very small. Brilliant. That I know it's not under pressure. Now within other liabilities, almost always going to be trade payables. It's almost always going to be short term thingies. So that means this company isn't going to go bust because it ran out of money. At least that much I now know. I can also see there's some advantages here. It has good level of inventories. It has cash as well. So all that's good. Then we look at profit, of course. We have to make sure the sales have been growing well enough. If the CAGR is good, done. We need nothing else. Has been profitable. They maintain their margins for 10, 11 years now, means very, very stable. The other income doesn't contribute, basically contributes nothing. Now, if the other income is very high, that's a good sign to go deeper into the finances. Because that means the company is probably trying to hide something. Otherwise, why is the other income more than its normal income, for example? This happened to Naukri in 2022, which we were talking about earlier. Profit making throughout, that's about all I need from this, right? And just to check quarters, how have these quarters been going, like this financial year? If growth's been there, brilliant. This is very basic, right? This is almost everything you need. Cash flow is a good thing to have, but companies can have negative cash flow and still be good companies because companies might be expanding, right? Like if you look at Ether Energy's cash flow, you might see it's negative because it's put in a lot of money to invest. Cash flow negative isn't bad as long as the cash is being invested. Cash flow negative is bad if the cash from operating activity is negative. Like if the net cash flow that the company generates is negative. That's a problem, not this part, because this can include investments. Yeah, that's it. Then it would be valuations. Very briefly put, and by valuations, it's not about checking P, it's about checking historical P. If PE is what you go for, if you can do a Schiller PE calculation, just Google Schiller PE. It looks complex. It'll take you 15 minutes to set up an Excel sheet to do that. And you can export everything from here, a money control or whatever, just feed it, and every stock you'll get a Schiller PE in 30 seconds after that. So if you can make Schiller PE, there's nothing better. But otherwise, if you're looking at just P, my advice would be to look at historical average P. So here it shows 60, but one thing that I'm looking at within P as well is the pre-2009 era P. Because uske baad na, the whole easy money thing had started. Now, if that is changing, we might be in some trouble. But even if I take that into account, let's say we keep it at maybe 32, 33, and this is currently at a 40 ka P. So it's only about 20% overvalued there. Seems okay to start a first tranche, especially given that the stock is as stable as Page Industries is. It's giving me a good margin of safety. Ticks all the boxes. I won't go big on it because the piece still doesn't look very enticing. That's a very basic way to analyze it. Here I know the business of the company. That's a completely different analysis. You have to understand the entire value chain. You have to understand right from the raw materials to where it goes to the consumer or the business, how the entire value chain is structured. You have to know the weaknesses everywhere. You don't have to go deep, right? You don't have to know every company in it. You don't have to know every competitor at every stage. You have to know this company's competitors. You have to know their advantages and all that. It doesn't take as long as people think it does. If you just focus on it, it usually can be done fairly quickly. Okay. Railway sector, because the government doesn't have money, I won't go into it. Simple as that. The government is going to face a massive cash crunch. It's going to lose dividends from OMCs, which accounted for some 30,000 crore last year. It's going to lose taxes it's getting from every major corporation because they're not going to make profits. It's going to lose the money that it has to balance out on where it makes losses on LPG, LNG, and petrol and diesel, because it can't charge the same. It can't increase prices. It has to pay more. If the government increases prices right now, then it's a different ball game altogether. And it can't get money out from RBI because we don't have the space. Otherwise, we'll get inflation. So if the government can't spend, everything linked to the public sector falls. So that's how end of cycles work. So I was looking at Berger Paints today. In fact, I was thinking about going into it, and I picked Berger because it's slightly high beta. But Asian Paints at these prices, having corrected for this long, I don't think anyone can lose money on it. This company again is not going anywhere. It's faced a difficult period, perhaps the toughest period in the stock's history. But I don't think the Birlas will manage to uproot Asian Paints. Personally, I don't think so. It's been in this business for way too long, and it's now diversifying as well. So we'd almost gotten a breakout. Maybe the market sensed something in the competition. This fall is completely war linked. So if someone is thinking 2 years down the line, it's a screaming buy in phases, because the market can still go much lower. But I don't think it'll go. I really don't think it'll go below 1870 or whatever the pre-COVID high. I don't think it'll go below that. It might. That's why in tranches. Gold, end of cycle, Raghav. For me, I called out gold, I think 6 months back. I was early. I had some one gold was at 120 or something, 110. Even at 1 lakh, I was saying that gold is becoming overvalued, in fact. But now I think it's going to be in a range. It might touch a new all-time high, but it's not going to double from here in the next 5 years, is what I'm trying to say. Gold has seen this massive cycle. Let me just show you gold price chart to see. Gold's cycle, right, is very different from equity cycles, gold or other commodity cycles, because gold ka cycle works in 10 years, 10, 20, 30 years. That's how big it works. You'll see a period of a massive rise, right, 74 tak, and then till 76 and about, this was still a recessionary. So this entire thing, in fact, 70 to 80, this was a 10-year bull run in gold. And that's what we saw from about 2000. 2000 to 2026, it's been a bull run for gold. You can say that here in the middle, you have a period of about 7 years where gold did not give you any returns. That's what I expect here at the very least. It could be longer. It could be a 20-year period where you get no returns. This was a 27-year period of zero returns. But at least 5-6 years, I don't see gold giving too much. Not good enough to justify buying it as an investment. Safety, definitely. Supriya Life Sciences is a brilliant company. Sumit, long term के लिए तो बहुत अच्छी company है. We have to make sure we buy in phases. That's just my idea. I just want to buy in phases. But again, I'm just another guy, right? So if you like the company at this price, go right ahead. Hemisphere Properties is my pick from data centers. In fact, very weird, but I feel like the kind of land bank they have, somewhere or the other down the line, they're going to get into data centers somehow. I think the war is just going to be where it is for a prolonged period of time. There might be some escalation by Iran. The only fear, literal fear I have, is that Mr. Trump might just lose his head and nuke Iran. If that happens, then we're living in a different kind of world. That's a gap down market. That's a circuit to circuit market. But otherwise, I feel like Iran isn't going anywhere. The US cannot push them out. There's nothing they can do. They cannot escort ships out. In the Strait of Hormuz, Iran is the king. And there's no way to dislodge that king. And their demands are unmeetable. They are fair, but Mr. Trump can't do that. He can't apologize for the war. He can't give them reparations, because that's basically saying, I lose. And he won't be ready to do that. The war will keep going. Indigo Paints is very similar to Asian Paints, right? Like, it's the entire industry. Vindhya Telelink, Prakash. I'll try. I haven't followed it. Just letting you know. I'll give you a cursory opinion. Okay. Immediate thought is it's a cyclical stock. Seems like a decent time to buy if I'm looking at a 3 or 5 year horizon. I don't know anything about the business, but just looking at the stock, that's my first impression. It seems like a good time to buy if I'm looking at 3 years, because it'll double my money. 3, 4, 5 years, maybe 6 years, but I won't lose money on the stock. So not too bad, but why would I is my question. Like there's so many amazing companies in India. Why am I looking at Vindhya Telelinks? I see no reason to go into this. Is there any particular reason you want to get into telecommunication? Buy Tata Communications here. It's a brilliant company. It'll beat Vindhya Telelinks over any 20-year period for the next 200 years. I mean, practically, right? So why? Um, Tata Power. Yeah, long-term future though is good, but with Mr. Ratan Tata gone now, we don't know how the Tata business is going to pan out. That's my only thought. And so the chair, the current family representative of Mr. Ratan Tata, and the CEO are also having some disputes. So we're seeing cracks, and till stability comes in, I'm a little skeptical of all Tata stocks. Like let it, I think we should let it get a little more stable. Just my opinion. Otherwise, company wise, so it's a Tata company, it's in the right sector. Does seem like it's run up a lot. I mean, just face value pay. But eventually it is a Tata company. All right, we're done with all the questions. Now, just to reiterate, it looks like the market is going to give us a gap down tomorrow as well. I don't think this gap down will be bought into. I know the last gap down was bought into. I do not think this one will be. So I think the market is still underpricing the impact of the Strait of Hormuz. And it's not just me. Look at, just go to YouTube and go to Bloomberg Television or CNBC. Not CNBC Avaz or CNBC TV 18. I mean, the real CNBC, the US ka CNBC television, right? Google, the channel name is CNBC Television, not CNBC TV 18, not CNBC Avaz. And then Bloomberg Television, both of these, right? Look at the interviews there, and they talk so much sense that it puts things in perspective. That even if the war ends tomorrow, we're going to have 4 months of inflation, 4 months of really high prices. And we've already had about a month. So 5 to 6 months of inflation is inflation entrenched. That means that now you have to root it out of the system. Because for 6 months, companies will raise prices. No, very few companies will take losses for 6 months, right? Or reduce their margins. So that means central banks can't cut, and then blah, blah, blah. We know the story. It already happened in 22. And that's if the war ends today. It's not ending today. AI hasn't gone anywhere. We still see our IT stocks haven't recovered. In this market, when dollar is weakening, where everything else is crashing, AI should have been the safe haven. I wanted to go long on AI. Had it not been for AI and the threat, I would have. So if AI threat still persists, it hasn't gone anywhere. In fact, the more time you give AI, the more business it takes. That's the logic, right? The AI threat hasn't gone. It's still there. Now, long term, I do think some of the Indian IT stocks will do really well. And there's an interview by Mr. Rahul Arora. I saw it today on CNBC TV 18, I think. And he talked about how, he also talked about it 3 days back. He was saying how the cash rich AI companies will just buy the Indian companies or maybe abroad AI companies. They'll buy AI companies that are doing a good job and then build an internal system like an aggregator, right? Like puzzle pieces. And I think that will happen because they have massive amounts of cash. Like they have 10, 20, 30, 40,000 crores of cash each. So they can easily buy these companies, right? That's not a problem. But immediate term, we still have an issue. No? And then the biggest issue is the liquidity. We see private credit falling. Again, look at Bloomberg Television. Just check BlackRock limits withdrawals. Just type this in and type Bloomberg Television or CNBC TV 18 with CNBC television with it. Sorry, or look at Reuters. Right, just read it there. So there's multiple problems that we're facing. I haven't even talked about the war yet. Right, the war तो अभी आ रही है. ये सब तो उसके पहले से चल रहा. So there's many issues going on. That is my point. We can see Gift Nifty, even though the market was down today, is again down. We'll see our DIS try to fight, but I'm fairly certain they're running out of powder. So I don't see how long we can manage to keep this up. Today, though, they fought very bravely. Had it not been for the DIIs, what would have happened to our market? But they're running out of powder. And the worst part is, our people, right? The people who are giving the DIs money, they're running out of money. Where do they get more money from? Salaries aren't increasing. There's a negative 4% increase, inflation adjusted, in salaries in the services sector in India. First time in history. So salaries are not rising enough to keep track of inflation, which means people have less to save. You can't increase your SIP. Now you're not getting returns. I do, Meher. I do. I see it significantly below 22,000. Something has to dramatically change for that to not happen. Because if this trade remains blocked for another 2 months, then we're looking at a global recession. Something that I have always thought was a strong possibility at the end of a cycle. Sometimes we get smaller recessions though. It could still be that if we had a different precedent in the US, it could still happen. I'm hoping it doesn't fall below 22,000, to be very honest. I'm still short, right? I'm still massively short. So I'll make more money if it goes to 18,000. But that would destroy a lot of lives. That means blood on the streets. That means good people, people who are talented, people who are not at fault, who've upskilled, who know AI, for example, they lose their jobs. People lose homes. So, do I see it happening? I think it's a very strong possibility. I won't say it will happen, but I think it's a very strong possibility. I hope it doesn't, though. Prakash, it depends on how you work. In my opinion, if you're asking this question, you should be going mutual funds. It's that simple. If you have a job, if you have a regular income coming in from somewhere, and any mutual fund can give you 13 to 15% CAGR, you need nothing else in life. To make multi-bagger returns, meaning you find stocks that give multi-bagger returns, you need to make this a full-time job. That can't happen as a side hustle. At best, you'll make 6%, 8%. Did you know 90% of our fund managers in India do not beat the Nifty? 90%, not India, in the world. Fund managers, I'm not talking about retail investors. 90% of retail investors lose money. Fund managers do not lose money, they just underperform the market. So, how arrogant do I have to be to think that by spending half an hour a day, I'll be able to beat some very smart people educated from some of the best institutes in the world with all the access in the world? How arrogant am I to think that I'll beat in half an hour a day, I'll beat those people who are doing this 24/7? So Netanyahu is a problem, but you have to realize that Israel isn't very, how do I say this, attached to its leaders. Netanyahu can go out tomorrow. Trump going out will take a month. There has to be impeachment and this and that, a month at least, if not 6 months. So replacing Netanyahu and then changing the entire game, that isn't a big job. That I think, as far as my understanding of secret services goes, that Mossad can do in a day or CIA can do pretty fairly easily. As far as my understanding goes, because we've seen a lot of Israeli PMs come in and then they fall and then this happens and that happens. That doesn't happen in America very often. I think after Nixon, Trump was the next. So it's a massive decadal gap now. And Netanyahu is powerless without the US, right? Because if the US isn't protecting Israel, why do you think we have the Gerald Ford there? We had the Abraham Lincoln come in to attack. Gerald Ford came in there to defend Israel. That's why that ship came. And if they weren't there, from what I've read so far, it seems like we already have the entire area of Israel turning into Gaza, is the quote they used. But it's already being bombed. Without the US, there's no hope. They'll have to stop the war. Regardless, something magical has to happen ahead for Nifty to not go below 22,000. Because right now, the situation as it is right now, if it stays for another 2 months, Nifty is at significantly below 22,000. Any other questions, guys? Amazing session. You guys asked some brilliant questions. It's always, the best part is I learn as well. Because when you ask me these questions, I have to go deep and think about exactly how to make this work. Like what could happen, what are the scenarios and everything. So it always helps me to come and speak to you guys. Thank you for that. All right. So if there's nothing else, Parth, thank you. Everyone else, thank you. Strategic oil reserve release. Yes, Sniper Dog. So this is actually an important point. They're saying 400 million barrels release, but the actual volume that they can release, and again, this was on Bloomberg television that I got to know about it, they can only release a maximum of 2 million barrels per day. The amount of oil displaced by the Hormuz Strait is 20 million barrels per day. So in the best case scenario, even if they said they'll release 5 billion barrels, which they don't have, the capacity, the physical capacity of release is 2 million barrels a day. The amount dislodged by the Hormuz Strait is 20 million barrels per day. So this strategic reserve can also only meet 10%. Now, this I haven't read upon. I got to know about this today. There is a small alternative pipeline. If you're talking about that, that basically means nothing. Even that, I think that buys Saudi about a month extra. So let's say Saudi ko they had given 8 weeks, about 8 weeks to maximum 3 months ka stretch kar lo. My memory might be a little wrong there because I very briefly saw that period. But even with the alternative pipeline, if that's the one you're talking about, that's it. 9 million strategic oil reserves can't make 9 million barrels per day. They can't release. They can only release 2 million. This was an expert I heard, and he was on Bloomberg television. I'd be very surprised if he was wrong. So they can only meet 10% of the shortfall. That still means oil is at 110 about. Anyway, thank you so much. Can't be talking for more than an hour. Now I'm going to start underperforming. So we have Sunday. I'll be here again, 12 p.m. on Sunday though. I'll read up on this a little bit more, Sniper Dog, because there are two alternatives. One I know, I think that's the one you're talking about. The other I read about in the evening. I haven't explored that direction, though I was in something else. But I'll figure this thing out. I'll read up on this and I'll get back to you on Sunday. Ask this question again. I'll read up on this. Thank you very much, guys. It's always a pleasure. Happy investing. Stay protected. This is a time to protect your capital. Returns will come. Cheers.